Guys, this video is all about how you can use the Forex Factory calendar to improve your trading in the Forex market. So, first of all, to access the calendar, you need to punch in forexfactory.com. Alright, so here in the page, this is the home page of Forex Factory calendar. So by default, you need to first of all set your time to synchronize calendar time to your country's time. So to just click this symbol here, this clock symbol here. This is where you're going to set the time to synchronize with your local time in your country. So you can see by default you made, I think, maybe +5 or +4 GMT, but here in Nigeria just need to change it to +1, which is Central Africa, West Central Africa. So once you do that, you leave this AM/PM, just leave it the way it is, then click on save settings. Click on save settings. So once you do that, the calendar is going to blend with the time on the laptop. So you can see this is the time in my country, 10:45. This is 10:44. It's the same. As I'm doing the video, the time is ticking. So you can just, once you do that, just click here on the home page of the Forex Factory calendar website. So it takes you to the home page. So here is the home page. So this video is all about showing how to use the calendar in your favor to trade the Forex market. So to do that, you need to just click on calendar here. The other things other benefits of Forex Factory website, but this video is centered on how you can use the calendar, the economic news calendar, to your trading. So just click on the calendar. Once you click on the calendar, it takes you to the page where you have access to all the news that will be pumped into the market. So let me break it down for you guys. This is September 19. This is Monday. This is Tuesday. You can see it there. This is Wednesday. This is Thursday. This is Thursday. This is Friday. So what this means is that from Monday to Friday, there will be news. There will be economic news activities that will be pumped into the market. And one thing you guys need to understand is that the news or the economic events that occur in each country affects the currency of that country. So if a news is being pumped into the United States economy, it would either weaken it or strengthen it. So you need to know how to pay it with another currency to make profit. So this is Monday. We have 3 types of news this calendar. We have the yellow, which means the low impact. We have the amber color, which is medium impact. We have the red, which is the high impact. So usually the high impact is the best one you should be trading. They produce volatility in the market, and you can use that to make so much pips from the market. Because like I always say, the fundamentals is what most times creates trends or reverse a current trend. So we have some special news we trade from time to time. These news are called the high impact news. They move the market, they drive the market whenever there's a deviation. The deviation means that when there's a large figure between the actual and the forecast, that's a big trigger deviation. I'm going to get to that, but let me just take it slowly with you guys, because most of you are technical traders. You don't have idea of how the fundamental works in the forex market. So first of all, we have the interest rates. The interest rate is one of the major movers in the market. It's most times is accompanied with the rate statement. So the interest rate is set by the central bank of every country. It's either the cut or the hike. When the cut, it moves the market. When they hike, it also moves the market. But if they don't cut or hike, it might just not, there won't be much volatility in the market. But apart from that, another factor that moves the market is the rate statement. The rate statement actually shows, gives an insight of what is going to happen in the next meeting or the next interest rate meeting of the central bank. So they can give you an insight of give you what they are expected to in 2 months time or next month. Maybe they will cut or they will hike. So that's for interest rate. So we have the employment statistics. The employment statistics, it just measures the level of employment in that country. Maybe people lost their jobs or people gained jobs. So every country has an employment statistics. Statistics, we usually call it the uh, uh, USD has its own called the non-farm payroll, and then Australia, New Zealand, Great Britain pound, Japanese yen, they all have theirs as well. But the sweet part is that every country, releases its employment statistics for the month in, month out. They release it. For countries like New Zealand, I think theirs is quarterly. Yeah, theirs is quarterly. They release theirs quarterly. That's every 3 months. But Australia, US dollar, United States, and Canada, Great Britain pounds. I think those ones they release. Even the CHF, that's Swiss franc, New Zealand, they release their own from time to time. That's every month. So we have the CPI. CPI measures the inflation of every country. Okay, let me click on. First of all, okay, this navigation area shows the dates of the calendar. So I could change the time frame of this calendar to this month. So you can see today, tomorrow, this week, next week. So let me just click this month. This month is going to show me everything, all the economic activities that's going to be happening this month. I'm seeing it right here. So okay, good. You can see it's September 1. So like I said, this side used to know the day and the date. So September 1 is on Thursday. You can see that. And then this is the time it needs to be released. So this is the date. This is the time of that day the news is going to be released. And then this is the currency of which is going to be released. The news of the currency, the country rather, that is going to be released. So you can see this JPY, Japanese yen, Australian dollar, Chinese yuan, euro, GBP. So this is the currency, or let me say the country which news will be released for. This is the area you're using to check it. Then I've explained this to you, the low impact, the amber, the high impact. Then you can click on this box to see the detail of the news. So once you click on it, read the details of that news to know what kind of news you are trading, to understand. Then we have the actual, we have the forecast, we have the previous. So basically what happens here is that this is what creates the momentum, the volatility in the market. So the forecast actually means the economists are expecting a particular figure. It's not as if they are accurate, they are right. They are just predicting that they are expecting a figure to be released into the market. It does not mean that is what the release is going to be. It doesn't mean that's the figure that this is going to be. So when that country releases that news, then we can see the actual figure. So what drives the market is when there's a trigger, when there's a deviation, there's a large deviation from the actual and the forecast. So the previous means the actual of the previous month. That means, okay, we are in September now. So what this previous means that the actual of August. So this is the actual of August. And then the economists are forecasting that September is going to be 3.0 as well. That means there's not going to be change, no change here. But the actual is what the country is releasing as the figure, the real figure of that news, that economic event. So you can see it's showing you 4.6% here. So whenever you see a green, it means that there's an improvement. And whenever you see a red, it means there's a worsening of that figure. And when you see a black, it means that there's not change. That means it didn't improve, it gets worsened. So you need to understand all these basic aspects of trading the economic events. You get it? Okay, so let's keep going. So you can see I was talking about the interest rate earlier, and then we move to the employment statistics. Yeah, you can see this is the employment statistics that I was trying to tell you. This is non-farm employment change. This is the unemployment rate. So usually, uh, uh, like I said, when we have the figures to be green, which means it's an improvement from the forecast, it strengthens the currency of that country. And when you see a red figure, it means that it has worsened the currency of that country. So usually what we do is, if you actually pair, let me just break it down for you, the basic way of just choosing a direction when the news is released. If you pair, let's say the news is released for USD, and then you are trading GBP USD. So in this case, we have a green figure, if green actual. That means 315 is greater than 295. So this is a good figure for USD. So naturally, the US dollar is going to be strong. So what you do in this kind of scenario is that you are going to be selling GBP USD because USD has gained strength. But if it were to be a red figure means that the USD has weakened. So in that scenario, you're going to be buying the GBP USD. That's what you're just going to be doing. You're going to be buying GBP USD. So it's very simple. So when you see black, it means that there's no change. It means that nothing happened. There's not going to be volatility. And then we have what we call conflicting figure. In this scenario, we have a conflicting figure here. You can see there's a green here and there's a red here. So a conflicting figure means that there's an improvement, and there's a worsening release. So it's like they are conflicting each other. So you can see a sharp spike up, sharp spike down. So most times some traders don't even bother to trade when there's a conflicting figure because it's going to mess up your trading. Except you just want to scalp, you want to take quick 20 pips or quick 15 pips and then get out of the market instead of riding it. So conflicting figures are challenges when you are trading the news. So we have what we call revision. Revision means that the actual of the previous month there was an error and then it's being corrected this current month. So for example, you see this yellow symbol you are seeing here. You can see they said revised from 520k. Means that what they were meant to publish last month, August, was meant to be 520k, not 526k. So this is an error. So they are correcting it in this September, that August was an error in the release of August. So sometimes you could actually get a green or a red as well, the revised figure. So revisions too can cause conflicting figure if it's, let's say for example, we have a green here and then the revised figure is a red, and we have a worsening number here or figure here which weakens that currency. So I hope you are getting my logic, you are getting what I'm trying to explain to you guys. So that's for employment statistics. So we have the interest rate. You can see there's a there's a hike here. The previous was 1.85. The previous was 1.85. The forecaster said 2.35%. Then it came out as 2.35. So actually, let me explain something to you about interest rate. By default, once the actual is deviating from the previous, there will be volatility. Now we don't care about the forecast and the interest rate. There will be volatility between this actual and then this previous volatility, which will drive the market. Then this rate statement as well, accompanied with it. Most of the time, all the interest rate always come with a rate statement accompanied, and it can make the currency to be dovish or hawkish. When I say hawkish, it means that it can strengthen the currency, and if I say dovish, it can weaken it. So you need to pay attention to all this. This trading is deeper than what you guys think. Then okay, we have the GDP, the gross domestic product. For AUD, it's released quarterly. That's why you're seeing QQ. That's good. Whenever you see a suffix at the back, when you see a suffix for an economic event like this GDP QQ, the QQ means quarterly. That means it's released every three months as quarterly. So when you see MM means monthly, time to time, every month. Understand? You see YY, that means just yearly. So you need to know this little tricks about trading the market. So you can see this is the Canadian interest rate here. See, you can see there's a hike here as well, 2.50 to 3.25. You can see that. Let's keep going. Okay, I didn't talk about speeches. Yeah, central bank governors speech. This speech they move the market from time to time. The speech also contains vital information about what the future holds for that country. Maybe they are going to hike, or they are going to cut. So all these things, when you combine all these little tricks of the markets, you understand how this fundamental works. So let's continue. Okay, we have the Canadian employment here. Which shows that there's the figures are very bad. See, it's negative. Here there's no conflicting figure, so it's a good trade. This would actually means that the Canadian dollar is going to be weakened. So in this context, you are just going to be buying the USD. You are going to be buying the USD card. Means that Canada is weak. So we have the CPI, which I told you. Yeah, this was last week, September 13. Now look at this. How interesting this is. This is the CPI, which is released monthly for the USD. But did you know that? Okay, we are in 18. Sorry, I want to show you something about the CPI that was released. Okay, good. Okay. Okay, good. This is the same CPI. Last week, Tuesday on the 13th. You can see the USD CPI, which measures the inflation of the United States or any country that is releasing a CPI. You see, it shows that there's a good improvement. That's why you are saying green from 0.3, where that the economists forecasted. We have 0.6%. We have from minus 0.1% to 0.2%. This is very lovely for the dollars. So let's check how it reacted in the market. You can see, look at this long candle. You can see this long candle. This is the news. You can see this long candle. This is the news. So the momentum it means that the US dollar is strong this period. As in, there's nothing that can stop it from going up. Fine, the market might retrace a little bit, but it will keep going up. Let's check other USD pairs. You can see, look at that sharp downward. Then a slight pullback, but you can see it's still going down. This is because of the US dollar strengthening. The euro didn't really fall, but it continued. You can see, but it still continued. It's still going to fall. The tendency is going to fall until we get another news. Might probably reverse it. Now, some news might not be the calendar type of news. It might be a breaking news, but you need to understand all this. So, guys, I hope you enjoyed this video. If you like it, you can subscribe to our channel and get in subsequent videos so that you can understand all these little things that most of you traders don't pay attention to. So that's it, guys. I hope you enjoyed the video, and I will keep doing more useful videos that will show you better ways to trade the market and make profit. Thank you, guys, and have a wonderful day.
This video was brought to you by SoGit. Buy or sell your Bitcoin and perfect money on SoGit.com. We will pay you instantly within 2 minutes. Sign up today at sogit.com/register.